Okay, right. Good morning, good morning, good morning, traders. A warm welcome to everybody. It's 9:30 at the moment, man. All right, so with our disclaimer here, ladies and gentlemen, all the information we discuss in this video is opinion and should not be construed as advice in any way. A warm welcome, a warm welcome to everybody here this morning. It's 9:31 at the moment. Before we continue, let's greet everybody. Start of a brand new week. Good morning, good morning, good morning. Tandy, good morning there, darling. Hope you well. Right there in the comments for me. Happy Monday to you too. AV Trader, good morning. Brett, good morning. Aubrey, good morning. I see Young Sunny is in the house. Savage is in the house. Shirley Shakes is in the house. Good morning, traders. Quickly, just let me know if you're here. Let me know if you're here. I'm going to give you a couple of seconds to quickly do that. Yeah, quickly. Good morning. Like and subscribe, as we would say. Tato told me, Ash, make sure that you get the guys to like and subscribe the stream. All right. So good morning to everybody. Can everybody hear me? Is it all well? Are we all well here? I'll give you a couple of seconds. All right, to quickly let me know. All right, Brett, thanks for confirming there as always, man. Intel, same to you. I see Nhlanhla's here. Transfer is here as well. Good morning, guys. Guys, we're starting off nice and simple, straightforward, steady. I think I like that word, steady. We're starting off nice and steady this morning, and we want to try and obviously paint, a portion or partially what the image could be this week here, as it relates to the trades or at least to the markets. All right, so we're gonna really do our best. We're gonna be painting a picture together. So get out your brushes, your different colors. If you are all right, if you are using blue, if you are using red, if you're using green, whatever the case may be, please make sure that you get them out. All right, make sure that you get them out. Let me know when you have them out there, guys. Let me know if you guys have your colors out. Do you have your colors out, guys? Quickly let me know there. We're starting nice and smooth. Nice and smooth. All right, Tanya, I see you there. Good morning. Good morning. right, guys. All right. And we are back. Good morning. Okay, there we go. There we go. There we go. There. Katlejo, I see you there as well. Kula, I see you there. Good morning. Mateko, I see ready to paint, ready to paint. All right, there we go, guys. Apologies, just a little bit of a glitch there, but we are back. All right, we're back, we're back, we're back. All right, all right, here we go. So, guys, we're painting the picture very nicely here today. I think it's very important that we understand that we're painting the picture. What's very important, Jules, I see you there. Good morning. Is that we put some vision on what we could expect today, all right, and this week, and obviously for the rest and the remaining time that we have. So let's start off today with a quick one on the economic calendar, all right? So, what's important about the economic calendar here, traders? All right, I see Intel, pink of purple. I love it. I love it. All right. So, look at this, guys. Busi, I see you there. We have tomorrow. We have some news coming on. The sorry, that's the wrong. No. Hold on. Here we go. All right. So today, guys, at 2:30 today, you guys will see me at 3 o'clock again. So we're watching the CAD here today. All right. I'm sure everybody can see my economic calendar. If you can, just pop it in the chat facility. Actually starting nice and slow and steady here. We got quite a few trading rooms to get through, the week. So actually starting nice, steady, simple, so we can put a picture, or at least start to draw the picture and what we would like to achieve this week. All right. So we have some CAD news coming out. We got the CPI. We got the that's month on month. We got the year on year, the trim CPI, and we'll try to get into some of the detail at 12 o'clock. Maybe explain some of the differences there and so forth. And what that means. Obviously, tomorrow we got some of the average earnings index there for the pound. Wednesday, the CPI for the pound. We also have President Lagarde speaks there with the European Union or the Eurozone. We cannot forget the FOMC meeting minutes. That's going to be important for us at 8 p.m. on Wednesday. That's letting us know what's happening with the US dollar and the interest rates. I'll be chatting a little bit about that now this morning as well, okay? And then Thursday there, guys, employment change and unemployment rate with the Aussie dollar. And we also have the unemployment claims there for the US. And then finishing off the week there, we have at least Monday to Friday. We have retail sales for the pound. We have the Euro flash manufacturing PMI. We got the German PMI as well. So that's to do with the Eurozone, right? It's going to be important. We also have the pound here, at least the flash or the flash manufacturing or the PMI data that's going to be coming out as well. So it's a packed week full of medium and high impact data. Medium and high impact data. Mateco, this is a Forex Factory. You can just go to Forex Factory, you can go to calendar, and you'll find this exact calendar over there. All right, that's Forex Factory. All right. So, guys, let's start to paint the picture here this morning now with what is happening in the markets. Early, we are going to be checking out the dollar. We'll be moving along. This morning, Ash is doing a bit of a revision. It's not so much only to look for opportunities, but more so to look at what's been happening from Friday up until today. And as we do get into the week, guys, opportunities will begin to reveal themselves. So, but we need to know where we are. All right. Mateco, there we go. Brilliant. Beautiful. All right. So let's get cracking here, guys. It's a new trading week. At least the quick picture of what's happening across the markets and what we really need to pay attention to is us at least starting with the dollar. Okay, let's start with the US dollar here this morning. The big story is still the Federal Reserve. All right, some of the recent US data has been weaker, especially the retail sales and consumer sentiment. And we know that inflation at this point has remained relatively contained. And because of that, traders are now pricing in a 67% chance. Brett, watch this, 67% chance of the Fed that will keep those rates unchanged. Now, Brett, you and I, we've been going back and forth with this one for the past couple of weeks. And do you remember we had spoken about, the Fed saying that they're going to raise the rates, and the percentage went from 40 to 60. And now we're sitting at a 67% chance that the Fed keeps those rates unchanged in September. So we go from raising to unchanging. And this is exactly what I mentioned to Mr. McCaudy, to Tsepo, in the NFP last week. I would not be surprised if they start cutting. I would not be surprised if they start cutting. All right. And we do know that when the dollar weakens, we're seeing some of the other currencies benefit a little bit there. So we're going to check out the Aussie dollar, which is one of them. We know that the Aussie dollar at this point in time, guys, if I just go to it, is currently at the 71 cents. All right. That's going to be important. It's at the highest level in about 10 weeks. While we see the New Zealand dollar is around the 59 cent to the 59 cent of US to the New Zealand dollar. It's the highest level since June. So both currencies are also getting some support from their central banks. This is the Aussie and the New Zealand dollar. We know that the Reserve Bank of Australia is still keeping a fairly hawkish tone in their way. The markets are pricing around a 70% chance of another move toward the 4.60% mark. And we know that the Reserve Bank of New Zealand is also expected to potentially raise those rates. Now, what that means for us here, exactly up by 5%, yeah? So what that means for us is that we could see this play out. Now, just so you do know, guys, what Ash is going to look at this morning, I'm going to be looking at a bit of the higher time frames. I'm going to be looking at some of the big swings. And then as we do go along, I'll be looking at some of the intraday and scalping setups as well. Okay, just so you do know, guys, normally I would do a lot of intraday and scalping setups, but this time around I'm switching it up a little bit. I'm going towards the more swing trading style, and then I will add the scalping and intraday in there. Okay, so that you get the best of all three worlds. All right. The Japanese yen is another one that we should not overlook. At this point in time, traders, right now, at this point in time, the yen has recovered. Okay, it's recovered towards the 159 per dollar. We're also seeing that the Japanese 10-year bond yield has jumped to about 2.93%. It is the highest level since 1996, according to some of the analysts here. And the reason is that traders are increasingly thinking about the Bank of Japan that could raise those rates in September or October. So if I just look at this one, there's a lot of divergence at the top here. And you can see the move is already played out on the higher time frames. The move is already played out. Now, the question is, do we sustain that move? All right. Now, sustaining it will mean that we are going to be pushing all the way down, all right, past these areas over here. But what we are seeing now, and this is very important, guys, is that the yen has recovered, yes, but in its recovery, it's managed to create a higher low here. So let's not forget about that. It's managed to create a higher low, all right? Now, that higher low there, what's important is that we have broken through the support area at 158. So yes, there is still a move down that Ash is looking at here. I'm definitely looking for another push to the downside. But if it has to go down lower than that, that is a different story altogether. So this is the more overall movement that it's looking like here if you look at the yen. All right, the more of a dominating kind of a trend. And what's critical here is that we've obviously broken through various key areas to come down to the zone. Now, right now, the dollar index, where the dollar index is right now, if you go to it, it is coming down tremendously. It's at the 99.15 area, and it is feeding into a current support. So for as long as the dollar index is coming down, we expect the USD JPY to also come down, traders. That's going to be a very important point for you to notice here. All right. That's going to be a very important point for you guys to notice. So what we're going to be doing is, instead of looking at this entire area here, we're going to be focusing then our minds on this zone over here. That's what we're going to be looking at, that area there. All right. In that area, we'll be looking at it from a different perspective. You can see currently right now we have two key zones here that is being moved, and price is definitely finding some form of support, but at the same time we could be breaking some of those supports over there. So please guys, bear in mind, this is what is currently happening here. All right, with the USD JPY. Let me actually just do that so that you can see that this high is important. We are currently at a very, very important area. All right, so this zone here, hold on, let me just place it so you can see, and then I'll give you more info here. 158 is a key area here, guys. Please, please, please make a note of it. If you are able to make a note, and then actually the 158. Here we go. Hold on. Let's get a shape here, and then I'm going to give you some more information. So this area we're going to be watching very carefully. Very carefully. So please watch that area. That's the 158.34. This is the swing movement to the downside possibly. We break beneath that area, that becomes a beautiful place for us to. So what we need to understand about the bond yield that's jumped, the interesting part about all of this is that Japan's economy actually grew less than expected. Just 1.1% annualized in quarter two versus the 2% that was expected. So Japan has weaker growth, but the Bank of Japan is still dealing with inflation and a weak yen. And that's something we'll need to watch here, all right? So let's watch this very carefully. I hope everybody got that one there, the 158.343. That's the swing that the Japanese yen, we could see this play out early in the week. At least today, we could see the Japanese yen push down here. And if it does, guys, it's going to be a beautiful, beautiful, beautiful move. All right, it's going to be a beautiful move over here. All right, so that's the Japanese yen. That's the Japanese yen over there. If I can just do something else, there's a trend line here. Yeah, there's a trend line that I want to quickly expose here. Yeah, there's a trend line here that's going to be key for us right there. Yeah, there we go. So the first area that I can see us going to here below 158. Okay, the area that I can see, that trend line there, that's a key. Those are key areas. So I'm anticipating some movement down here if the yen continues to strengthen. All right. That's going to be a key zone for us. 158 to about, that's about 57 pips. So we're going to watch this very carefully today. 158. So if you break beneath this area, that's about 50 pips there. That's up for grabs. Okay. So it's like I said to you guys, we are now in the London session. Okay. So what we're doing now in the London session, we are just putting together some of the pictures here. All right. What we're seeing is, if you look at the USD JPY, we're seeing a weaker dollar. The AUD USD, we are seeing a weaker dollar. The NZD USD, you can clearly see that we are seeing a weaker dollar here. Look at that. So if we break that area there, if we break that zone, the 59 area to that portion, or at least to the upside, becomes our reality here. That becomes our reality here. All right. So let me put a arrow there so you can see what I mean. If we break above 59,276, there's a higher probability we go back up. So watch this very carefully, guys. We're going to watch and see If there's any scalpers that come in here, remember guys, the scalping guys, they're not going to be interested in this entire area. They're going to be interested in, if it rejects there, what can they get here? So this impulse to the upside, if there's a correction coming down, they can scalp it down for a correction. The rest of the guys, they can see that that's a higher low, a higher low, a higher low. So they're waiting for price to go up. So please note that that's a very important point, is that the swing traders, they still holding up, but the scalpers, intraday traders might just short it down a little bit here and then later on wait for it. That's going to be very important for us as we start this week off here. All right. So that's the dollar that's against the euro, against the NZD, against the AUD, against the Japanese yen. Let's now go to gold, because I know there's some gold traders here as well. There's absolutely gold traders here. All right. Gold traders, all right, is another one to watch, guys. All right. At this point in time, gold is above the $4,400 per ounce, mainly because the weaker US data is reducing those expectations for a Fed hike. So we've got the combination of a weaker dollar this morning, changing rate expectations, and geopolitical tension that's supporting gold to the upside. And notice what I just did there. I gave you three reasons why the support for gold to the upside fundamentally is what traders are looking at. Number one, it was the US data that is weaker. Number two, it is the expectation, all right, of the rate changes. Actually, four. Number three, the weaker dollar. And number four, the geopolitical tension. So there's four reasons why we are still supporting gold this morning. Not only that, but technically now, what we've done is we have broken above this area, and we are now moving towards this zone here. And if we break it, we go back to that area, which is more of a much stronger zone up to the 4.7. That becomes the next reality for us. So if we break above this area here, that's the reality from swinging it from that area to that area. So we might just get a correction here during the other shorter time frames, yes, but ultimately we'll be looking to go back to up to this area, which is important, traders. So we're painting a picture, or at least starting out this morning, of a weaker US dollar, guys. That is against the yen, that is against the Aussie, that's against the New Zealand Kiwi, that's against the Euro USD, and now we're seeing a weaker dollar against the gold price. All right. Then, obviously, we cannot omit oil. We are sitting above the $82 a barrel, actually 85. And the Middle East obviously remains the biggest driver here. Tensions around Iran and Israel and the Strait are keeping the risk of supply disruption alive, which gives us the kind of exposure that price could be pushing up again. But that doesn't mean that it's going to affect all of these other assets that we've just spoken about, because what we've witnessed over the past few months is that every time the oil price goes up, the dollar strengthens. That may not be the case this time around. The correlation might be totally skewed now because we have other factors that's supporting a weaker dollar, especially those rates, especially the inflation that is cooling down. So the oil price going up may not support a stronger dollar this time around because the inflation is already priced in. So that's important for us to understand, all right? Then we also need to add to this. Oil isn't exploding higher because crude is still moving through the strait. That's keeping supply available. For as long as there is a supply, guys, the demand cannot interfere. That means that the oil prices can be relatively ranging then, because that's normally what happens. When there is supply, the oil price ranges. Please do not forget that point over there. So yes, there is movement here. Yes, we are sitting at a place where there is more push to the upside at this point. But again, all that Ash is looking at this point in time is this yellow block. I'm only looking at the yellow block. And what I've highlighted in the yellow block is the following, is that if the price decides at this point in time to close beneath $85 a barrel here, all right, I'm anticipating oil to push down further into this orange block over here. Sorry, I said yellow block, orange block. That's what I'm anticipating. All right, if price breaks below the support over here, I'm anticipating price to continue to the downside towards possibly here the 83, the $80 a barrel. That's the oil price. So make sure that you guys are there, that you're watching it, guys. At the end of the day, all right, we've started to paint the picture for the week. All right. Let's not forget BTC. BTC is still stable. I've not changed my canvas here. I still had the same painting on BTC. Still stable, guys, especially with the gold price and all the other currencies moving and advancing against the US dollar traders. I'm still seeing the Bitcoin price rally up to 70,000 a coin. I'm not seeing anything else outside of that at this point in time. Okay, if anything else drastic happens, obviously, guys, we'll let you know. But right now, this is where we are at. Okay, we at 63,000. We still at a very important support right there. You can see it. Still a lot of divergence at the downside here, guys, at the support. So no change in Bitcoin. I know that Ether or Ethereum has also advanced up. So that is good for us, and for all the other guys that are watching or that is watching the cryptocurrency. And remember, guys, you can trade it with us. We have our exchange that you can trade, with us. All right. Then, ladies and gentlemen, let us then go to some of the stocks, because I think it's important for us to note that stocks are important and it's part of many traders' market watch. They want to get into it. And so let's maybe start it off then with the US market, guys. It's holding up pretty well. We see the S&P 500 and the NASDAQ have now had 3 straight weeks of gains. All right. And the futures are obviously slightly positive to start off with. That's what I'm referring to over here. So this week, what the guys are going to be watching here this week, all right, they're going to be watching earnings from Home Depot. They're going to be watching earnings from Lowe's and Walmart, because those companies can give us a good idea of how strong the US consumer actually and the activity really is. And that's important for us. So let's do a quick analysis here on S&P 500. Let's do an analysis quickly on NAS 100. And then we'll see if we can get the US 30 in there as well. All right. So again, I'm looking at the higher time frames, guys. I'm looking at it to see what's happening on the swings. And at this point in time, guys, when I zoom out completely, let me just quickly do this. If I zoom out completely, I can see this advancement here, guys. Look at this. All right. But that is also a sign of divergence. Okay. So please note, I'm dealing with this impulse at this moment in time. That's the impulse that I'm actually dealing with. And that impulse has divergence. So there is strength that has vanished here. Excuse me. Now, I'm going to say this to all of you guys. If you are trading the NASDAQ right now, the S&P 500, there is a lot of divergence at the top. Now, what is the correlation that I want to say on Monday? The correlation between the stocks and the dollar here is, at this point, if the dollar strengthens, all right, we see the stocks come down. If the dollar weakens, we see the stocks go up. So I'm picking up on divergence here. However, the dollar is weakening, which ultimately says that this divergence is not ready to come down yet. So this is what we do in the meantime. We mark out our zones and we watch the dollar, because if the dollar strengthens, then it means we could be coming down here. Is everybody 100 with me over there? Let me pause there for a couple of seconds. It's now 1 minute after 10, guys. We're just painting a picture for our first session in the London trading session, okay? When we come back at midday, 12 o'clock and 3 o'clock, we're going to expand on that. Now we're just really painting the picture of what the markets look like this morning. There seems to be a stronger dollar at this point, okay? All right. Now, if I swoop down to my lower time frames, please start making notes now. Start making notes now, because this is where it's getting very interesting. All right. This is where it's getting very interesting. And I want us to watch carefully now. I want us to watch very carefully now. We have some support levels that's going to be critical for us. All right, 77. We have some support levels. Let's do that. We have some support levels that's going to be critical for us. And I'm going to be watching it now from here on out, because we could just come down here, guys. This is going to be our first zones that we're looking at here. Let me just place a line. That's the first area. All right, that's the first area. Let's do that. So we're going to be watching this very, very carefully. Okay, we break beneath 7717. We're going to come back during the other sessions to evaluate that. 7717. At the beginning of the week, we are starting off with monitoring that level on the S&P 500. That's what we're going to be looking for at this point in time. Okay, that is what we're going to be looking at this point in time. Everything else, we wait for it. We wait for it. Everything else, we wait for it. There's no drastic things out here. All right. Yes, some of them do. Absolutely, some of them do. All right, some of them definitely, they are within the fib area. So if I take a fib and I place it there, you can see it's within 23 and 38. If I extend it up completely, you can see it's roughly around the 38 area. It's roughly around the 23.6. All right, so it definitely coincides with the fib areas. Okay, all of this is actually all levels, or at least most of them, guys. Whenever I chat or send you levels or look at these zones, they would coincide with it. Okay, so that's the S&P 500. The NASDAQ, guys. This one here, I've already done some work. These are critical zones. All right, this is a critical area right here, 27933. All right, this area here is a critical zone, 27780.12, and I'm going to just place that there. So we're going to be watching this very carefully. All right, so both S&P 500 and NAS, we're watching very, very carefully. You're welcome there, Brett. And then we have the US 30. Okay, I haven't done any work on the US 30 here, guys. I've done no work on the US 30. Now, I don't always have to use a daily frame, guys. Sometimes we can use a 4-hour frame as well, to find what is happening. Now, you can really see here there is definitely a push to the downside, which is important. All right, I think that's a critical place for us to start with. All right, and then what we're going to do now, I'm going to show you where price, so that's that low there, that was a very important low right there. Okay, and what we would like is, we'd like to see price move towards the center here, which is what it's doing now. All right, so we have a high probability the price could be moving towards this area over here. It's already giving us quite a bit of good moves. So we're going to see if it actually pushes till that zone over there. Okay. Let's see if it pushes till that zone. If it does, beautiful. That's where we're anticipating price to go at this point in time, guys. That is roughly around the 52997. 52997. Let me just put something there. There we go. There we go. So let's now go back. All right. Because we can see the correlation is off with the stocks. So if I go back to the gold price, all right, if I go back to the gold price, now you can see we're moving towards the 4456 weaker dollar. On the 1 hour frame, guys, look at that. Divergence. So this is a lower high. Look at that. In actual fact, look at that. You guys see that? There's the lower high. All right. So look at this. And I want to make this clear. Let's see if everybody's here. Quickly, guys. Is everybody still here? Let's make sure everybody is still here. Quickly. Because I'm about to drop something here, guys. Is everybody here? Let's make sure. Quickly. Quickly. In the chat facility there. Quickly, guys. I'm waiting, guys. Guys, and whilst you're at it, put some likes in there. I'm seeing some of the likes there. Quickly. All right. Now, even although we're starting off with a weaker dollar early this morning, guys, from what it looks like, even although price is moving towards highs, see, that's the thing that people are not seeing when they open up the charts. They see the weaker dollar, yes. But when you look at the weaker dollar at the start of the week, look at it's creating, or the weakness is creating, an impulse in the other currencies. It's creating an impulse in the other currencies. What this means is that by later today, maybe even tomorrow, we could see a turnaround coming. We could see a turnaround coming where we started off in a weak state, but we turn to become a more stronger, or turn into a stronger state or condition. Remember, what I have positioned to you guys this morning is the higher time frame movement. What we're seeing on the shorter time frames is corrections. That's important. Please note that, guys. The higher time frames, we have the dollar decreasing, but the intraday and even lower scalping time frames has the dollar strengthening. All right. The NZD USD on a 4-hour, 8-hour, even the daily, beautiful movement up. But if you go down to the hourlies, to the 30 minutes, 20 minutes, there's the divergence. So be very careful now. We see the upside on the higher time frames, but we see the corrections in the early stages of the week pan out to start coming through. So with that being said, that's the approach that Ash is going to be taking this week. I see a weaker dollar, yes, but I see the scalping and intraday substructures giving us a bit of dollar strength. Is everybody up to par with that? Up to par with that one? I think that's pretty simple. Overall, we're seeing on the daily, the 12-hour, we're seeing a stronger dollar. A weaker dollar. But on those much shorter time frames, we're seeing a bit of strength come in, and we're going to be taking it apart like that. Okay, we're going to be taking it apart like that. So please go and look at some of the other assets. I did all the popular ones, or at least started off with the popular ones here. All right. And we're going to be looking at more of these and the intraday sculpting setups possibly there at midday, 3 o'clock, and 6 o'clock. And then obviously, once that's done, once the strength of the dollar is done, we will be switching over to seeing a bit of that weakness take into effect. Now, what I want to conclude on is the following, all right, is that some of the calendar events could be pro-dollar, meaning strengthen the dollar in those short-term sprints. Don't forget that. Do not forget that. All right? Some of these can be pro-dollar, meaning giving strength to the dollar in the scalping and intraday movement versus the swinging holding movements. That's going to be very important for us here this morning. All right. So guys, make sure that you bear this in mind. When we come back at 12 o'clock, this was a nice start to the week. When we come back at 12 o'clock, we will then begin to dissect the shorter time frames. All right. I'll see you guys at midday. Don't be late and bring someone with on the stream. I'll see you guys soon. Have a lekker morning further, at least what's left of it. And I'll see you guys at 12 o'clock. I'll see you at midday. All right. It's Ashley Revere, guys. What a pleasure being with you this morning. Our first session in on the 17th of August. All right. It's 10:14. I'll see you guys very soon. Ciao, ciao.